In this edition of Knowledge Series, we will be talking about consolidation in the banking sector space. Why we have chosen consolidation as one of the topics for discussion is recently in the economic survey released by the Chief Economic Advisor, that is Ministry of Finance, one issue has been flagged very clearly, that way forward in the public sector space, the number of banks may get merged way forward and may reduce to 4 banks, which are 12 now. In fact, at the time of nationalization of banks, there were 27 public sector banks which have been merged, and State Bank of India has merged all its associate banks and also Bharatiya Mahila Bank, and after that the nationalized banks, there were a lot of mergers. In the first leg, Vijaya Bank and Dena Bank has been merged with Bank of Baroda. That was done with effect from 1st of April 2019. Then later on, in the next 1 year, 10 banks have been reduced to 4 banks. That brought down the number of public sector banks to 12. Now there is another talk in the air that these 12 banks will be reduced to 4 banks. Now, why this change in the policy that we should go for consolidation? Now, consolidation as a business strategy is not new in the banking space in India or abroad. If you see the private sector banking space, if we have to take the name of say large banks like ICICI Bank has taken over Rajasthan Bank and Bank of Madura, and HDFC Bank has taken over Times Bank. There are a lot of other mergers and acquisitions which have happened in the banking space, which is not new to the system. But now we have entered into an era where consolidation is coming as one of the most important strategy to add value to the banking system. Now let's look at how the consolidation can add value to the banking system. If we see the prior to nationalization and after nationalization and after banking sector reforms, if we link the 3 threads, then 27 to 12 now, the journey is long. And then we have started opening up private banks, and private banks have been doing relatively well when compared to the public sector banks. The reasons are obviously due to many constraints of the public sector banks in terms of independence, autonomy, decision making and corporate governance issues. Of course, the private sector banks are not that they are not having these constraints, but if we compare the performance of public sector banks and the private sector banks have an edge over that. How can we say that? Because the public sector banks were having a market share of 91% in 1991, which has come down to 74% in 2010, and it has now declined to 64% in 2019. And going by this trend, it is expected by the experts that way forward by 2025, maybe the private sector banks' asset size will exceed that of public sector banks. So that's the stage at which we have reached. Now, if that be so, then let's go back to the Narasimham Committee report in 1991, which led to the banking sector reforms. It has in fact recommended that we should have about 3 to 4 national level banks having an international presence as well. There is the large banks, we should have about 4 in the public sector banking space, and about 10 banks which should have regional and national presence. So I think somewhere we are inching towards that now, and maybe that we will go beyond that. Now, what are the merits of merging of the banks? The merits very clearly outlines 4. The first one is the asset size of the newly formed bank will be much higher than the independent banks. That's the number one. The number two is the talent pool, the competency, the leadership, the synergy can be derived from the competency of the people. And third thing is the capital adequacy ratio can be improved, and the risk appetite of the banks will increase. That will give a leverage to the newly formed banks, and the consumers will get price advantage. That is when more banks come together and there is a synergy, and the operating expenses will come down, and there will be an overall efficiency, and the infrastructure can be better utilized. These are all some of the merits of consolidation, that the size of the banks will increase. If we go to the size of the public sector banks, then only State Bank of India is having the strength to be in the top 100 banks of the world, and no other bank is even nearer, even after the recent spate of mergers in the public sector space. So I think we have to go a long way in deriving more synergy out of merging, and this experience of merger has been so recent that we cannot derive much of the advantage in the near term, but maybe in the long term it is possible. Now, coming back to the desirability of mergers, yes, provided we can rationalize the number of bank branches. Number of bank branches and the geographical spread. Now, if we go to the recent spate of mergers in the banking sector space, Canara Bank has taken over Syndicate Bank, Union Bank of India has taken over Andhra Bank and Corporation Bank, and Punjab National Bank has taken over UCO Bank and OBC Bank. That was the plan, because Indian Bank has taken over Allahabad Bank. So these are the mergers which have taken place, and they can get the advantage of spread of the north and east and west. One can have the advantage of the presence in other regions, and maybe the competencies and the technology advantage can be derived out of this exercise. So I think even if we go to the global merger tendencies, we can find that many of the countries have merged their banks and brought down the number of banks down to few banks, so that the better management, better synergy can be derived. From the consumer perspective, the biggest advantage can be the price advantage. When the operational efficiency increases, when the ability to lend will increase, and the income stream will be such that the net interest margins will rise, as a result of which the affordability to reduce the rate of interest will be much better than what it is today, and overall the profitability of the banks can increase, and the non-performing assets can also be better managed by the new bigger banks. Now the issue is, on one side we are issuing new licenses, that is the small finance banks are coming now, payment banks have come, and now cooperative banks, urban cooperative banks are getting activated because they have now come under the purview of Reserve Bank of India, and HFCs, that is housing finance companies, are also under Reserve Bank of India's regulatory ambit. These developments will also bring some type of a consolidation in the space of non-NBFCs and also in some of the cooperative sector as well, and that will also give much advantage to the consumers. Ultimately, 5 things are the testing points for the success of the mergers of the banking industry. First is, the sustainability of the banks should increase, the soundness of the bank should increase, that is the operational efficiency, and affordability to for right pricing of the products and services, and more important is the last mile reach to the hinterland, because financial inclusion, which has been started on a very good note, and we are now pursuing financial inclusion with full spirit, now it needs to be taken forward so that we can ensure that the last man connectivity can be established, and people are able to derive the benefit of the banking system, and they should be in a position to borrow from the banks and repay the loans in time. That is the most important aspect. And return on assets, earnings per share, the valuation of the shares in the market, all these will get an edge if the consolidation takes place. Now the only one big minus point or the disadvantage of merger is the banks will lose their individual corporate identity from the banking space, which will be emotionally affecting the employees of the erstwhile banks, like the employees of Vijaya Bank, Dena Bank, or if you come to the Oriental Bank of Commerce or Allahabad Bank, Andhra Bank, Corporation Bank, these banks which have which do not exist in the banking space, their employees for near term, for the initial period, may feel that their corporate identity is lost, but way forward, in the larger interest of the banking system, merging the banks will be a very ideal proposition. And one good point that needs to be complemented, that the banks which are merged are working very fast to integrate their technology platform, they are working very fast in integrating their products and services, they are working very fast to bring the accounting policies together. So the way there is a pickup in the speed of integration, I think it is now sounding that merger is possible, because earlier we were thinking that it's a very big hassles to merger, but now merger is possible because the experience of the first spell of merger of Bank of Baroda with Vijaya Bank and Dena Bank, and the 10 banks coming down to 4 banks, this experience suggests that we can way forward be able to bring down the number of public sector banks, so that both the consumers and the banks get benefited, and maybe that we will be able to position the banking system on a stronger footing way forward. So that's what is the take as far as consolidation spree is concerned. I would request that you can put your views, your feedback on the comment section, and I would also request you to keep subscribing to the knowledge series, so that we will keep learning together about the banking and financial sector. Thank you so much.